There's going to be big changes in real estate. We're going to jump right into it. First of all, you heard about it. The Fed just went ahead and decreased rates, another cut. That is positive for the trajectory of where we're going, which is really, really great news. As we continue to have reductions, there should be a snowball effect over time in which interest rates for the housing market decreases. Of course, this is not a direct correlation. When the Fed does this, interest rates reduce. It doesn't quite work that way, but there will be some indirect impacts, which again is going to impact us in 2025. Okay, jumping forward. Also, the demand as rates reduce, we've seen this before, right? We've talked about this. We have more people come back to the market when interest rates reduce. It just makes sense. And we're starting to see that. We're having a ton of people reach out asking about purchasing homes in 2025. So that's because, well, interest rate talks, right? Hey, they're getting excited. They're saying that it's going to become more affordable. Plus, home prices have decreased as well. Now, if you look at this, look at the demand right here. Current pace at 4.7 million homes here for the United States just for 2024. And there's the forecast, right? If you look at the average, again, we spoke about this last month, we have about 5.4 million homes forecasted to sell next year. Huge positive, just information coming out. And of course, we don't have a crystal ball. This could just be thrown out the window if something changes, interest rates don't decrease, or something just negative occurs. Then yeah, this just won't happen, right? Now, what about it when it does? And of course, if and when interest rates reduce, we see that a rate less than 6%, more than half the people want to consider purchasing a property. So, hey, we may see a huge amount of influx of buyers in 2025. We are all geared up and ready for this influx, especially since there's a huge amount of inventory on the market. And of course, the election. How does this impact real estate? Honestly, it didn't matter who was going to be elected. People are going to go ahead and be comfortable or confident with whatever the result was and proceed forward with their real estate because people have home needs, right? They're going to need to live in a home, an apartment, or a property. It doesn't matter. They're going to have to go ahead and either purchase something or rent something and not live outside. So real estate does continue. And the people who were a little uncertain through November are going to come back in December in a big way because now they know what's going to happen in at least the next few years. Let's talk about the data, right? Jumping right into this. 70 days on the market is our average. That is the same as last month, and that's expected for fourth quarter. Why? Because it always takes longer to sell a home in fourth quarter and just normal. So this is very, very expected to have seen this time on market. The new listings have increased 6.21% from this time last year. So we are trying to sell more homes. Does that mean we're actually selling more homes? No, not necessarily. And we also see close price to list price ratio. Again, that means if the seller wanted $500,000, did they get it? No, they reduced the price quite a bit in order to sell. And that's great for buyers. Sellers, you just can't be unrealistic. You have to be very realistic about your price. Or you see these slashes, dramatic slashes, in order to sell. And usually what happens when you price too high, you're going to end up selling less than what you could have gotten if you just priced it right. So it's so important to listen to the data and watch it and literally list the home based on what the data is telling you. The median list price is $470,000. That's a little consistent over the last few months. The median close price is $430,000. Again, consistent over just the last month. We see active listings and sold listings. We still have about over 40% more active listings compared to pre-pandemic. That's also consistent over the last 5 months. And again, 5 months of inventory. Consistency again. We have a lot of inventory, meaning buyers have a lot to choose from on our market right now. So before I go into just pros and cons of sellers and buyers, let's go into something a little different. What are the number of homes sold for resale? I'm not looking at all new build and resale combined, just resale as a seller and buyer. So if you're between or up to $500,000, there were only 21.92% of homes sold. That was it. Okay. Sounds small. It is a little small, but That's the majority of homes sold is in this price point. Everything else is going to be a little different. So between 500,000 to 1 million, only 515 homes sold. That was 17% of that population. 1 million to 2 million, 12% sold, and so forth. You can see, pause this and see, hey, if you're in the $3 to $5 million range, only 5% of homes sold. Okay, have the expectation your home is going to sit for a very long time, even if your home is priced correctly, right? Those are the expectations. Then sellers, let's go over what's happening with you. You're at the tail end of the cooling period, right? We're starting to see some homes prices being competitive depending on the price point you're in, right? And that bit below $500,000 price point. Active listings are consistent. We see May through October, it's been about the same. Days to sell still taking longer, right? 70 days. 5 months of inventory, that has been consistent. We're still having competition. Interest rates, they've been up, down, right? We went from the 7.1%, we're still in the sixes. We were jumped to 5.9% on resale, then jumped back up to 6.8%. They're just kind of seesawing. We expected that up to the election. And now in a few months, we expect to see consistency and a trend downward. So let's see what happens over the next few months. We're going to revisit this in January, February. Come back to this video. I'm pretty confident, based on what we've seen in the past, rates should decrease. Negotiation power. If you're under 500,000, you're closer to a balanced market. And if you're above 500,000, then it's still a buyer's market. So you would want to negotiate with buyers at this time as a seller. Of course, unique homes that are priced correctly and they're very popular, they're sold, right? And your asking price must be correct. So again, if your price is too high, no buyer's going to buy it. They're not dumb. They look for homes for sale, and they see your home is the highest priced property. They're going to go somewhere else, right? It makes sense. Buyers, let's talk about you. It's a great time to purchase Q4. Every Q4 tends to be that way, with the exception of the pandemic. And right now, this is no different. This month has been wonderful for buyers getting amazing deals. New home interest rates are incredibly low, 3.99%. New builds are beating out resale homes for sure. So you can likely get a better deal, better price, and a better monthly payment if it's a new build. What's the trade-off though? You're going to go in the outskirts of Austin metro area, right? Buda, Kyle, some of these other areas for sure. There's some Austin properties that will have these low interest rates, but you're going to pay more. The seller will negotiate on inspection repairs and closing costs, which is great. And homes priced under $380,000 are definitely competitive. Homes will be in better condition now versus actually pandemic time, because they kind of built them a little quick. So right now, homes should be better in their quality build. And anticipate price increases. Of course, we already mentioned this, Q1 of 2025 for home prices, and interest rates should reduce. Of course, the Fed expects additional rate. We already talked about that. And inflation is close to 2%. It's at 2.1%, almost right at that target mark, which is really great to see. So guys, if you have any questions about buying, selling, is it the right time? Should I pull the trigger? Here's my situation, or just what's the value of my home? We're here for you. All right, we'll see you next month. Let's see what happens. Take care.